Okay, there we are. And I don't know why I am on the wrong side of the page, but I'm going to move that. Okay, there we are. Good morning. Can everyone see clearly, guys? Like this over. I've had all kinds of there we go. So let's get started really quick. Good morning. This is Simon with TRADERTOUGH.com. Quick message, and let me kill it so the background fans for computers will be killed. There we go. A little bit quieter now. So past performance is not indicative of future results. This is for educational purposes only. The idea here is that I'm sharing my trade plan with you in hopes that it'll make you a better trader. However, please don't follow me blindly, right? I do lose money. Friday, I was down. There's no question about it. I'm pretty straightforward and open about it. You have to know what my risk parameters are in order to be able to follow me blindly. And I had a conversation about this with someone over the weekend. Okay, not all my trades are going to be appropriate for everyone in the room, right? Either for psychological reasons, emotional reasons, or financial reasons, right? So importantly, just make sure you know what you're doing when you're following me, right? And the highest odds locations are still locating your trades in the zones. Despite the use of the algo, they still provide a huge win rate. 10-point rotations still provide a huge win rate. I am biased to the long side over the short side. I think longs are easier than shorts. And anyway, that's my 2 cents. And I'd like to see everyone making money. My focus is more and more on pulling out the easier trades out of the day, and then just kind of making life a little bit easier, right? So let's get focused on what we're looking at from the profile really quick. I have a ton of windows open because I've been experimenting a lot over the weekend, and it's kind of set me behind on being ready for today, but I'm good to go now and fully rested. I was up early. Number one, look at the profile from, that's NQ, here's ES, right? And I'm going to get rid of this, close, yes. Let's see, we need this, nope. Actually, I think I'm going to keep that for a second until I work something out here. Let's see. Nope, 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 nope. And let's just duplicate this. Duplicate chart, and we can draw all over it because I have the other chart already laid out. Okay. Okay, so looking at the day, number one, what we have to, there's two things that are a hurdle. Most people want to know, well, what is it going to look like if it goes up? So number one, it's not bearish unless we're getting below and holding below value area low and the low from Friday, right? So you want to write that down. If we're not consolidating underneath 28.08 and a quarter, at any point in the day, it's going to be very hard to get a super big extension back to the downside, right? Obviously, overnight, they attempted below, they popped back in and pushed right back up, right? The next part, value area high is going to be important today. If we get above value area high, 28, 30, 50, and hold, right? And hold is the key part. I'd say consolidate for over half an hour above that. You have a good chance of it pushing out and forcing a short squeeze. So what about the rest of the profile? What stands out? Okay, so right where the volume point of control is, it was also where that huge anomaly was. Excuse me, that huge delta was. There's a 5,000 delta. I'll show you all in a second. It acted as support and resistance all night long. 28. So really the area of concern is 28.17 to 28.1850. Hold on one second here. Do y'all still have the wrong screen on? No, you should have the right screen. That's right. Hold on one second. Okay. We're good there. Okay. So if we get above here, right, I think if we can consolidate above 28.1875, right, they'll use this as a base. And where I would think the attack would come from, normally I would say this would be a weak location, but this is about 10 up, right in here. And then there's a couple of little areas in here. There's this J period that ended up being, wait, hold on one sec here. I apologize. I was off by one day. Yeah, let's clear this. Sorry, bring this over. This goes here. That 28.24 to 28.26, and there's a, if you look inside that profile, which was, see how thin the volume profile is there? Even if I spread it out, here, let me show you. See how we just have a little bit of volume build right above it? So these come into this area and have an initial rejection out of 28.2450 to 28.2650. Okay, but then we're left with a bunch of little tiny areas to contend with, right? So let me fix this. That F period up above. Okay, so notice the anomalies tend to come right in front of right underneath the volume builds. See how the volume builds right here and the anomalies come right in front of it? Okay, so that's why those anomalies work, is because there's volume behind it, i.e. trap traders. And that's why you get the roll to the downside when those occur, okay? You'll see this is a particularly low volume area right in here in this 28 to 30. You'll see again, there's a low volume area right in here, starting really at 22 and going to 26, but I'm going to lean on the anomaly because the volume builds right behind there. And the assumption I'm making is that these traders who bought here are trapped and they're going to have to come back in and offer back out, right? And then if you look, the chart is repaired all the way up here at 28.3750. So my biggest warning for the day, or my biggest thought process. So what you want to make in your notes. So there's a couple of notes. In front of the anomaly and behind the anomaly is very poorly auctioned. There's holes in the profile, and you would normally expect rejection, except when the whole thing's a big hole. The anomaly itself tends to act as the rejection. Secondly, what would it take to get back above? Well, see how we couldn't get back above 28.3750? So the first thing I'm going to say is, if we close back above 28.3750, I'm going to assume the whole thing from Friday was just a ha-ha head fake, and we're going back up. I expect initial rejection out of that 37.50 should we be able to get back up there, which I have my doubts about today. Secondly, it's Monday. We usually have balance. So now that y'all have seen this, right, I'm going to erase this because those are the key areas. And then value area low. Normally I wouldn't care about the prior day's low, but value area low and an untested naked volume point of control is laying right underneath there, which would give at least local traders a reason to come in and be responsive buyers. And they were last night. So if we look at these levels, right, and we see how they responded to them so far, look at how the PA came in overnight. And then there's a little level right here at 2,800, right? So if we duplicate the chart and then we analysis, clean chart, change it to a 5-minute chart. 5 minutes. Okay, so number one, chart settings, 24 hours. Okay. Now let's go back to candle and let's pull this in here. Okay, so this is where we'll open up. You notice that we rejected directly out of 28.16, right? See how we rolled down to 28.08. So notice this is late in Asia, right? So this is a fantastic setup if you're around to trade it. When they break that value area low, then they close back in. See how that becomes support all night long, which is why I wrote the comment that my guess would be we're going to go down there and test or attack that Friday low, right? I guess I was off by a hair here on where Friday's low was. Right here, there you go. We're going to attack Friday's low, right? And then that's going to make a great trap point. And I put that on the Slack comment right when we opened, right? I said my suspicion would be, what did I write? I always forget here. So here, let's try to get over. I wrote value area low occurred at Friday's low, key location. We are struggling at the 5K delta from Friday afternoon, which is 28.16 to 28.18, with 28.1875 being Friday's volume point of control. We've rejected out of that area early, and bulls need to see above to go up and test that 28.24. Where did I write? Wow. I could have sworn I wrote. Oh, there we go. And I would think that pretty much a flat open in Asia would think session lows from Friday get tested, right? So I knew I wrote that somewhere in there. So that was yesterday, right at 5:13 p.m., right after we opened, right? So the whole point behind that is, number one, I still love Asia, right? You can see the early rejections out of that location. If we throw a VWAP, they had a nice VWAP test in there, and then we rolled to the downside, and this made a great trap and roll back up. Notice the initial rejection there at 625. John, I spoke to you about this weekend. Look at that first tap in. If you're looking for trades that give you clear location, look at the anomalies in Asia. First tap in, beautiful rejection. Okay, you had to be a little careful right here because they swept through, but if you were looking on a 1 range bar or a 1.5 range bar and you waited for your first green bar, or even waited for the push below, right? Push below the anomaly, push back above, backside test, and you still had beautiful location to get the push up into London. And then look how the market behaved so beautifully and went right to the anomaly and then reject down. There's a lot to be learned from this, because this is what it should look like. The difference is during the US session is you get a lot of noise surrounding it, and you get it's not quite as tidy because you end up with stop runs like we did in Asia there, but you end up with a lot of them in the US session. Okay, so what would I expect today? If I can, based on the behavior pattern, right? If I can get above and hold above 1875, I would expect to push into 24 to 2650, where I would expect initial rejection. The question is that rejection a huge rejection where I can get 5 or 10 points or even roll all the way back down? Or is it a quick tap in and a quick tap out, then continuation back up? We won't know that until we see how they behave with whether there's an open drive higher or an open drive lower. The reason I bring up that point, okay, the market is littered. I'm going to now erase all these lines, okay, and I'm going to draw this in. The market is littered with examples of profiles that look like trend days up, okay? Usually what you get after a trend day up is you get a balance, like we did on going from the 17th to the 18th, okay? Again, looking at what was a pseudo trend day up, you end up with balance. I expect balance today, but every once in a while, the market whips out a nasty little all the way down, all the way up type of day. And if you look how that day broke out there, right, notice how we drove right to the anomaly, rejected just in front of it, got back above, went into the biggest hole in the profile and rejected back down, but it ended up essentially being a trend day up. It tested below value. So notice how we broke early in the first hour and a half of trading. We broke below prior day's low. We then punched back in, and finally it was actually not the first or the second. It was the third backside test that came around noontime that got your trap and pushed you all the way up and into the hole in the anomaly. And then if you'll notice, this is the final anomaly that needed to be repaired on that day. Look how we came all the way back up. The reason this is important, if you got bearish on this day and said the market's going to zero, you were utterly annihilated over the next 2 days as we ran straight up, unless you were pretty nifty and crafty down here on the bottom end. Again, I would caution getting overly bearish based on 1 day's price action on a market that's pretty much been going vertical into the upside. Even if we were in a bear market, the face rippers to the upside are awful, and you can misgauge them really easily. Even when you're best planning, you can get hurt. Be really certain the short you're taking will not prevent you from taking your better layups to the long side, okay? I need to check one thing on one of my domes real quick to make sure I'm up and running. And I'm not. Okay. So example number one, I want to give you a couple examples because I read a lot of bearish crap this weekend, right? So I want to give you another example. Again, we close on the low of the day. This thing rips all the way up. Okay, so one of the key indicators there, by the way, right? Notice how the relationship of value area low and the traps above value area high from that same day are playing a key. Notice that when we came up on this day, right? See how we came up and we danced around value area low from that trend day down, value area high, we danced around it, held above, and they finally got below, and that's what gave it the long liquidation to key off this day. Value area high and value area low from trend days are really important, okay? If we come back and look again, I'm going to show you a few more examples. This was a time where the market actually rolled down. This was 6/15, 18, and 19. The market opened every single day below value. It consolidated under value. It looked short. I remember because I think I lost money on one or two shorts on every single day in this area, right? What you will notice is that we closed up every single day. And just to give you reference of where this was, we're currently trading 28.19, and that occurred all the way back, right? It wasn't too long ago, and we're talking about 27.90 to 27.50. So clearly, two things: under 2,800, we have evidence that there are responsive buyers. Do you think these guys are going to look at? So think about how the market works psychologically, and think how most traders and retail traders, and believe it or not, most institutional investors are not at the level of sophistication that we're at on a day trading basis. Okay. So think about this. If I looked at these days and I said, wow, look at this. Buyers came in, and what I would conclude is everywhere from 27.70 to 27.50, I want to be a responsive buyer. So I'd write that down in your notes. There's going to probably be responsive buyers between 27.70 and 27.50. Where exactly? That's our job as day traders to figure out. But I doubt they let it slip through without trying to hold it. They clearly tried to push down very hard against them in June and utterly failed. If we get below 27.46, story changes. This now all becomes responsive sellers because all these guys will be trapped. I'd bet a lot of money these guys are going to defend, and I will bet a lot of money these guys are going to defend because I'm a buyer in this area in general. That also would put us on a 30 to 50 point roll down from where we're trading right now. You've got to be prepared to be aggressive in that area. Okay, and I don't think there's any point in discussing anything below here. Okay, I'm expecting responsive buyers out of this area. Not eager to be short in these locations, right? And I'm looking, if I can hook up the long to get some extensions off of that, particularly if you'll notice after the first hour, right, is where we were getting the continuations to the upside. So I would say if you're going to short, you probably want to try to hook that up in the first hour, because the majority of the days lately where we've been bearish, I'm going to go back a little bit further, okay? Again, you would think this would be a break from balance, right? I'm talking about right here. Now, I understand that this gapped, right? But everywhere you find a day where we were looking like we were going to break, buyers have constantly stepped in this year and driven straight back up. On this particular day, you could have looked at this day as a one-day wonder on 6/13. Look at the following day. We open up, we test. Notice they test undervalue, attempt under, and you would think, hey, see how we can't establish underneath value except in one period? This is the only period we establish in the morning underneath value, push back in, backside test, and the shorts are just hard here. And even if you look the next day and said, well, now it's short, they drove you right back up. That's where my biggest concern lies, is leaning on the short side of the market right now until it proves to me that it's a fantastic setup. What would constitute a fantastic setup? One, a big delta to trade above, right? A push up on a momentum trade. So let's go through and discuss that, right? What am I looking for? And what do we learn from Friday? Number one, what I'm thinking is that we end up with more of a two-way scalping market. Let me see if I can find this. Oh, I know what the problem is. Here we go. There we are. Okay. What did I learn from Friday? Okay, number one, I learned that we had difficulty pushing up, and as opposed to the chief setup that we've had where we get a star push to the downside, then close above and push, right? Did we just open? We just opened. That's good. I'm not even worried about the first hour. Let them do whatever they have to do. That's the clown. First 30 minutes, just for me, not worth it. Okay, so if we look on Friday, here's Friday. Okay, what worked? Momentum push to the upside, right? See, so two things. I made an error when I went through here and went through in great detail. If I had taken my first close above my star down, which would have been momentum push lower, close above, I've been able to get 1.5 points. 2 points wasn't available, but I would have been able to get 1.5 points. And when I went back and counted last week, I would adjust your scale on the star to 1.5 and then leave your trailer. The reason why, I just missed 2 points about 30% of the time. But what those trades ended up being was either break even or flat. It's worth moving your scale up 2 ticks and making sure that you get, oh wait, you can't see the screen. I'm so apologize. There we go. Push to the downside. Push to the downside, right? And then push back up, right? This is the close above. It rolled back down. You only could have gotten 1.5 points out of this trade. But more importantly, it's the first time in a long time where the closes below the momentum pushes to the upside gave huge rotations back to the downside. I will try a few of these trades and see if I can get a rhythm going. Again, I'm hesitant, and I'd rather these come from pushes to the upside, right? Reminder on Delta. Remember Friday afternoon? Where are you? I know you're here somewhere. Had to be right here. Mr. 5,000 Delta. See that? So remember, I stopped trading at that point because I'd taken my losses for the day. I haven't had 3 stops in a row. I went back and looked. First time I've had 3 stops in a row in over a year, right? So I wasn't going to make it 4. I was done for the day. I wanted to make sure I could come back today and have a good, clear mind and not be frustrated or upset. So number one, notice that 5,000 Delta gets an immediate push above. That's pretty normal off a big Delta like that because you've got these guys squeezed. Notice that 5,000 Delta comes from breaking the swing high. Notice the immediate backside test gives you 2 points for my scalpers, right? Notice that the immediate close underneath, which is this bar right here, also gives you 2 points. But the best trade was this trade right here where we pushed back up into this bar. I gave you a beautiful roll to the downside of almost 4 points, I want to say. It was more than that. It was 16, I think is what I said. And it rolled you down to almost 12, almost 4 points, right? And then notice when we come back up, see once we get established back above again, see how they're fighting and they're pivoting, and that's why they were pivoting all afternoon, and it just got really noisy there at the end of the day, right? Notice that at the bottom, it's not uncommon when we're panicking, right? It's not uncommon when we're panicking not to get the algo to fire anything. The delta pattern just didn't form correctly. But if you'll look on this last push down, here's your biggest delta on the push down. There's your close above the biggest delta. Immediate short squeeze, which was the clue that they were paying attention to that delta. And then look at the backside test. So again, why do I point all this out if I didn't trade it? Well, I want to learn, right? I already paid the tuition. I took 3 stops on Friday. I didn't hit my max stop loss, but I took 3 stops. I haven't done that in a long time. I'm sure as hell going to learn what the price of from the price of tuition. I'm taking something away from that day that'll help me make money going forward. Okay. So that being said, I know if we get into this situation, even if I don't get a start momentum push to the downside, that I can look for that trade to go long. And then notice where the resistance came was from the last momentum push to the downside. We exactly lined up with that bar, and that rolled us back down. Also notice the other change. By the time I was rolling Friday afternoon, I was like, oh, here's the trade, there's the trade, and I wasn't taking any of them because I'd already gotten stopped. JD, who I was spoken to on the weekend, said, hey, you called it, Simon. This is where I ended up taking my long right here, I think. And this is where I ended up taking my stop right here. And JD pointed out, he's like, you're just not getting the lift that we've been seeing in all the other days prior, right? That's a big clue. I'm pretty sensitive to that, but I don't necessarily trust myself on it when I see it. That's the downside of leaning on the algos. I want the algo to tell me. And sometimes I have to be able to trust that read. There was just no lift after weeks of getting almost immediate lifts out of any kind of trap. Okay, so I mis-executed in this area, I would say, and I should have just bailed for a few ticks loss when it couldn't lift out of this 3350 area. So long story short, what are we looking for today? I'm looking for rotations down, signs of panic, stars indicating momentum, pushes to the downside and closes above. I'm also looking for momentum pushes up that get exhausted. If we look at the open this morning, right, and we look how this laid out, our biggest delta of the morning came right off the open, the 1740, right? Notice that we closed underneath. Look at what we're coming to backside test now. So look at what we're testing. This is the 5,000 delta right here. That's 1625 to 1875. So far, we're slicing right below it. And I would be shocked if they can just push it straight back up, right? But I'm going to remember, going back to my chart over here, remember going back to my chart over here, right? What am I currently trading in? I'm trading inside Friday's value. What's my price action that I get inside Friday's value? Is generally not open drive higher or open drive lower. It's chop. Notice where we've come so far is right to the top of that poorly auctioned area, right there at 28, 21.50. This would be my target, assuming we can hold this anomaly right here, this 15 to 17 area, right? If we can hold this anomaly, my sense is that we can push through that 21 and retest that 24 to 26. And from there, I don't know. And that's an okay thing to say. I just don't know how it's going to look. I'm also not interested in trading the first half hour because just like me, no one else knows what the market's going to do today. There's plenty of people who think, hey, we're going to break and come down and retest this hole in profile right down here, right? There's plenty of people who think we're going to come back up and retest the scene of the breakdown back up here. I don't know, right? What I do know that I can predict the next 10 points pretty accurately. And I know if we hold 15, the likely target is 24 to 26. If we can get down to the value area low, I'll look for traps just like I would have in Europe for pushes back up. And then I'm going to let the algo trigger me in. So that's the plan for today, right? NQ, same story. I'm not trading very much NQ. I posted it. When we get wide ranges like this, NQ gets much harder to trade. For guys who need tight stops on NQ, good luck, because the whips are 10 points up and down on NQ in this area. You need deep pockets to survive, right? Lastly, later this afternoon, I will be doing a webinar, for lack of a better word, on the Asian trading. If you need, and what I call survival trading, if you need to make money, you must make money every day. That's what this will be centered on, what your setups are from I must make money and walk away every day. And I'm talking about like, I've got to get $100 out of this thing every day, or I've got to get $200 or $300. What do those setups look like? They're certainly not guaranteed. There's certainly not a promise that those will be huge, 100% win rates, but it's a little bit different style of managing a scalp and knowing exactly what you're looking for. And it does preclude trying to get stretches, right? You're basically going in there and going, what are the time frames and what are the locations that'll let me get my 1 or 2 points, focus on those, increasing trade size over time, and not trying to catch the swing. So a little bit different strategy. And I'm running that because there's a couple of guys in the room that are in that exact situation. I'll probably do that at 1 or 12:30 or 1 today, depending on when I get back from lunch. So anyways, guys on YouTube, thank you for joining. Again, this is that first half hour can be pretty whippy. I expect balance today, which means the edges are the best places to trade. I'm looking for momentum traps on the downside and momentum traps on the upside, okay? And I'm looking for big delta bars to trade against when they print. And we'll be mapping it out piece by piece. So let's go through let's just take a quick look here in the first half hour. There's the algo. And we'll work from there. You'll notice the other thing to keep an eye on if you're bearish, right? I'd want to notice that we haven't been able to get underneath VWAP since 2 in the morning, 24-hour VWAP, right? That would be my minimum requirement. And then I would want to backside test, and I would not want that thing to get more than 2 points away from VWAP for a roll into this 2808, 2807. Everyone knows that this thing should test the low from Friday, right? And you'll notice the first thing they try to do out of the gate is give this a little push right here, and we haven't even been able to make it to the swing high from overnight. They squeezed everyone up. We're right in that big delta here. I'll show you all where that delta is sitting. There's Mr. 5000 delta right there, and we've been dancing around him since Asia Open. We tested them in Europe. We got above them. They're going to need to hold, and I'd want to see again. Notice that break below them would also coincide with a break below VWAP, and then what I'd want, right? What I'd want is push below. Notice now that this is our last momentum push to the upside on this bar. If you want an aggressive short, your entry's against this bar, right? Because we've now closed underneath. With a stop, I'd put my stop 4 ticks above here just to make sure I survive in the first half hour. Again, it's not for me. That trade and this time frame is just simply not going to work for me right now. So I'll wait and let it play itself out. Hold on, I need to respond to somebody really quick. Okay, got that handled. Does anyone have any questions, guys? Floor's open. I'm looking at the Slack channel. See if anyone has any questions. Oh wait, no sound. Is anyone else having a sound issue this morning? Okay, thank you guys. I'm Joe. Refreshed. Okay. Okay. So I'm looking at the Slack. I don't see any questions. Everyone looks fine. When I say, so this is the last thing I want. I'm aiming this towards the room. Guys, when I say I'm taking a trade and it's aggressive, right? Make damn sure you're on the aggressive side of the aisle. Like this trade right here, even though I didn't take it, right? I said, hey, I'd be willing to be short this bar, right? This bar for a push to the downside, right? If this occurred anywhere outside of the first half hour. This is momentum push up. This is a failed momentum push up, and it should roll us down, and that should be the invite to start pushing towards 2808. Now, if I were to have taken that, the first thing that would have come out of my mouth is I would have said aggressive trade. Next thing I would have said is half size, first half hour, right? I don't like getting run over, and I don't know how the order flow is going to work. It's hard to predict order flow in the first 30 minutes, right? So what you want to do when that happens, guys, is you want to go, okay, you should know before you ever touch that button, right? You should have a spreadsheet. And on that spreadsheet, it should say aggressive trades. What's my win rate, right? The other part of that formula is when I am pushing trades, if I say this is aggressive and I'm entering this trade aggressively, right? The other thing that should be going through your mind when you say that is, how far is Simon pushing that trade, right? If I'm taking a scale initially, right? So let's say you need to know, am I going for 2 points and I'm done? Or do I actually think I can get to 2808 or bust, right? Now, this is an important concept. Sometimes you'll say, guys, I am either taking a loss or I'm taking my target. That's really important because if you're always taking 1 point or 2 points on these and I say I'm taking my target or I'm taking my loss, that means there's a good number of times where I'm taking this trade, this aggressive trade, and I'm pushing it for 4, 5, 6, 10 points, right? On the majority of the contracts that I have on. If you're taking this with a 2 or 3 point stop and you're always taking 4 ticks out of it, it's not the trade for you, right? Now, on the other hand, if I say this is a scalp and it's 1 point and I'm in and out and you're trying to turn it into 4 or 5 points, that's also going to be a problem too because it's likely to result in a stop, right? The best setups come from location. Notice this particular setup came from a push in to resistance, right? We already know we had the 5K delta going back to Friday. We got a momentum push to the upside that failed, right? It's actually gave us the best failure possible because it failed with another momentum push to the downside. And now I would have to make a decision right here. If I were currently short when I mentioned it, which was on this bar right here, right? Let's say I shorted 28.16 and a quarter. I now have to make a decision at 28.14 and a quarter. Yeah, I'd be covering 28.14 and a quarter, probably half. And I'm moving my stop to right there, because I want that trade to last. But I'm going to do everything I can to get that trade to push down to 2807 to 2808 and a quarter, right? And that's how I'm going to treat that opportunity, but on half size early. When you go through and look at your P&L, right, on guys that I coach one-on-one, consistently, when I look, where are your losses? Almost all of them, 60% of them, 70% of the losses are coming on the short side of the trade. It's simply harder in ES. You want short side trades? CL all day long works great on the short side. Any individual market where there's one index and one product in that index will work better on the short side than an index of 500 stocks that it has a underlying fundamental order flow, cash flow that pushes in. You're going to constantly find responsive buyers, and it's in a multi-year bull market, right? Buyers know they can buy this thing and push back up. It's simply harder to get the short. So to step back, don't get caught up in what I'm saying. Make sure that you have a trade plan checked off. If you can't handle the stops in the first half hour, and I take a stop in the first half hour, like occasionally I'll be approaching 9 o'clock and I'll go, Friday is a great example. 3 minutes before algos fire, I took a trade that stopped me. And I said, I may get stopped on the algos, but this is my setup. I'm taking it, right? You had to go back and make sure that if you took the stop, you were going to take your other high-end setups as well. And then the last piece is going back to Friday on the stops on the long side trade. Those longs are on 10-point rotations at support. And that setup's been working for months in a row, not weeks, not days, months in a row, right? Friday was the first true trend day down we've had in a long, long time, right? I'll take my bumps on that because I've more than made up for it by focusing on the long side for the last couple of months. And de-emphasizing the short has saved not just my bacon, but a lot of the guys that I'm coaching one-on-one. They have been saved by that process, right? And it's made a huge difference to their bottom line. So anyways, I hope that helps out. Guys on YouTube, thanks for joining. Again, what we're looking for is at the bottom on our rotation down, momentum push to the downside. By the way, that's the biggest delta of the day right there so far. That's going to be your over-under, right? They can't get over it. Expect to push back down to retest the lows. They get over it now, and they can get past that 5,000 delta. Expect this whole area to act as support for a push up into 24, 26. Guys on YouTube, if you're losing money or you're boom bust, stop and paper trade till you have it down right. Make rules and structure until you can trade off a gut, meaning you have to have rules to start with so you can understand the context in which the market trades, and then move to trading off a gut whenever necessary. If you approach this as a business, you should be able to be profitable on a pretty regular basis. Anyways, thank you all for joining. Have a great day and trade well.